Hello, I'm Josh Griesse. Thank you for joining us for this video blog on COVID updates from the insurance perspective. I'm an estimator and project manager with Washington Commercial Painters, and I'm here to ask those questions that you might want to ask your insurance provider. I'm joined by three insurance professionals who will be answering our questions. Let me introduce Nick Warren from Parker Smith & Feek.
Yeah, hi, good morning or good afternoon, wherever you're watching this at this point. But Nick Warren, I'm a principal and I run our Oregon operations in Southwest Washington for Parker Smith & Feek. I've been with Parker Smith & Feek for 5 years and I'm an owner. Primarily, we're focused on the construction, real estate, and manufacturing industries and have 7 offices throughout the West Coast, working again with a lot of the contractors and are a proud member of the ABC.
Thank you, Nick. We also have Aran Buchan with Hub Northwest.
Hey, Josh. Thank you. Yes, Aran Buchan with Hub Northwest. I'm a senior advisor. My clientele is mostly contractors, developers, and related fields. I've been with Hub Northwest for almost 8 years now.
Thank you, Aran. And we also have Stephanie Carlin with Propel Insurance.
Stephanie Carlin with Propel Insurance. I'm on our construction practice team. I've been with Propel for 11 years now, heavily involved in ABC. I'm the chair of the membership council as well as on the board, and love working with contractors, and we're here and ready to help.
Thank you, Stephanie. Well, to kick things off, the first question I have is about business income loss. How does business income work in regards to COVID-19 shutdowns, and how are we covered, Aran?
Yeah, that's a good question, Josh, and we want to start out with this because I think this is one of the most common questions that Stephanie, Nick, and I get from our clients. And by way of background, business income coverage is lost income your business experiences due to a covered property loss. For example, a fire or a big tree branch, something like that falls down, it hits your office building, and you're required to shut down for a period of time. And, you know, whenever you do that, there's obviously a business income loss that you experience. And what they do is to cover these losses, they do a couple-year look back to see, okay, how long were they shut down? About how much money did they make this time of year, and let's see if we can make them whole. Now, to tie this all back to COVID, there are two sort of main issues that we have in regards to business income loss. The first is it needs to be a property loss, which obviously COVID isn't. So common examples would be a fire, a windstorm, a flood, something like that. You know, the COVID pandemic we're all going through isn't necessarily a property loss. And so that's one of the first major hurdles. The other hurdle really is the fact that you're going to have a disease sort of exclusion in most policies, a virus exclusion. So when you go through that renewal meeting with your broker, they're going to talk about the war exclusion, the terrorism exclusion. That's that form you have to sign every time. And that's one of those that's always listed on there as well. So those are two major hurdles in getting any business income coverage for your business. So the end result has mostly been a denial of coverage in that. Now, that's not to say you shouldn't carry business income coverage. It is extremely important. It's something you should talk to your broker about because there's lots of circumstances that it does kick in. But in regards to COVID specifically, it's usually not going to have any coverage unless there's some sort of sub-limit, something like that in a few policies, but those are pretty few and far between. I have one real brief example. I have a client right now who had a major backflow in one of their toilets. It flooded their entire building, but it just happened to happen during the COVID pandemic. And so the carrier actually tried to push back and say, no, now wait a minute, is this loss really from you not being able to make bids? Are you not making sales calls? Or was it really because of the COVID? And I think that's a good reason to have a broker to advocate on your behalf, because we're able to go back the last couple of years and say, no, it's been very consistent. Even March and April during the pandemic, these were their sales numbers going back 3 years. We had to go and prove that, no, it was because of this overflow problem that they had, not because of COVID. And luckily, we got the carrier on our side. So it's very important to have a carrier or a broker to advocate on your behalf under those circumstances.
And having a personal relationship with that broker.
No, absolutely, and you need to check in. And I would note that business income coverage isn't necessarily included in all policies, and sometimes the limit is pretty low. So you're not necessarily going to have $1 million, $2 million limit. A lot of times you're going to have $50,000 that the carrier may just throw in. So it's certainly something you want to look into when you do have your renewal meeting with your broker.
Wow. Well, thanks for that, Aran. That's really helpful to understand. And more importantly, having that personal relationship with your broker, that makes me think about with COVID, the PPP loans. We had a lot of our members getting PPP loans. Is there any coverage related to that, Nick?
Yeah, great question, Josh. And there are 3 carriers that have come out since the global pandemic. The 3 are Concord, CERTA, and then also AXXL. So the 3 have created a product based on a lot of our clients who have accepted the PPP loan. It does have a 6-year statute, and so that's really what the tail coverage is for accepting this, that the IRS and other regulatory bodies have to kind of do a look back regarding whether the money and the funds that were accepted by various companies across the country was acceptable. We really see the focus of people that buy this insurance primarily because there is a minimum premium of $100,000. So the focus is really on those that collect $2 million or more. So if you're in that 0 to 2 million, you're probably less likely to get an audit, but not that it can't happen. It just seems like what we're hearing is that the IRS is really focusing on those that are on the 2 million and above. And everyone's heard the stories through the media about the Madison Square Gardens and the larger companies that through subsidiaries were able to accept PPP money. Those obviously, I think during the underwriting due diligence, which again, part of buying insurance is this due diligence, whether it's your property insurance, whether it's PPP insurance or whatever, in terms of having the diligence and the loss control and focusing on what exposures you have as an organization. This process does help with that. If it's a real red flag, you'll know pretty quickly from the insurance company that there's issues. So overall, the thresholds, again, you have to be an independent contractor or eligible to be self-employed or a sole proprietor or have employees of 500 or less when you accepted it. So again, you need to make sure you met all those matrix. If you slip through those, it's kind of a no-brainer that you're gonna need to pay that back regardless. And then the economic need, and that's the piece that really this insurance provides, is that whether the economic need was there or not, some of our clients don't even know, right? I mean, they experienced some hardships. They feel like they deserved it during that difficult time. Businesses maybe pick back up. So there's that uncertainty of, if I do get audited and maybe my business picked back up, I did have a lag at that certain time and I needed to fulfill payroll. Does that still qualify? And again, that ambiguity, we just don't know. And that's why these products are on a limited basis offered in the marketplace. And just real quick, I guess really again, we talked about the minimum premium is about $100,000. The premiums are roughly about 4% of whatever the PPP loan that you received is. And then the retentions start around $200,000. So it's a very catastrophic coverage. It costs, it's fairly costly, but it really is intended for those, I would say, more middle-sized, middle-market companies that had a significant amount of PPP that they accepted.
So I can see some issues, Stephanie. Are we talking with our lawyer to make sure that that we should be reimbursed for this or not have to pay it back? I'm sorry. Instead of going to our broker to say, okay, I'm having to pay it back, I guess I should, according to the law now. Does my insurance kick in? How do you work that out, Stephanie?
Well, I think the hard part, and Nick really honed in on it well, is this isn't insurance that everyone's going to purchase, right? This isn't going to be widespread. It is hard to approve. It's very heavily underwritten. And when they see giant red flags, they're probably not going to issue an even possibility of a policy, right? It's kind of like purchasing building insurance when your building's on fire. Very similar. So it's heavily underwritten. It is expensive with higher retentions. And so I think the relationship with your attorney with regards to the PPP loan, especially for our average subcontractor or average contractor, is going to be the key, and really having those conversations with your attorney and being prepared up front, because this insurance is not going to work for the average contractor. And it'll work for some, and it's great to know that it's out there. But I think PPP is still kind of heavily landing on the attorney relationship more than the broker relationship, other than having the conversation, knowing it's available, and knowing what the costs are to understand if it makes sense for you or not.
And Nick, you said $2 million. Roughly, what's the key company that's going to be looking at this?
Yeah, so again, I'm not trying to get myself in trouble because I'm sure that the companies under $2 million of PPP can get audited, but that is kind of the threshold where, again, with the minimum premium, if you receive more than $2 million in one or two of the PPP payments, that would be really the area where you would want to start looking at this type of insurance. So if you're in that 0 to $2 million area, again, highly recommend talking to your lawyer, your CPA, making sure that it seems like your need was appropriate, but above that is when you would want to maybe consider taking a look at this. And it's very similar, like Stephanie said, to terrorism insurance, to cyber liability, some of the other topics that we talk about. It's obviously a high catastrophe, low frequency, right? It's only going to happen once. You may not get any return for your investment on the premium, so there might be other alternative risk management ways to fund this in a savings account or some type of other account as well, in the case that does happen for the future.
And just kind of tying in with what Nick says, when he's saying, 0 to 2 million, that's really for the numbers to make sense. Because even if you're under that 2 million mark, remember it's that 4% rate off of your SBA loan. So if your SBA loan was 500,000, guess what? They're still going to charge you 100,000 because that's the minimum premium. So he's not saying you can't purchase it in theory, but when do the numbers start to make sense, or when are you purchasing insurance for a premium that's higher than what you might be having to pay out if you're audited?
Right. It seems to stem from wanting to save money in this pandemic and make sure that costs are as minimal as possible, because there's several laws coming through that might increase taxes, and we don't know what we don't know. So Aran was talking about that personal relationship with your broker. It sounds like it's going to be really helpful to see where we can save money, each company individually, especially going forward when they have so many unknowns. Stephanie, what are some ways we can reduce premiums?
So it's interesting. This was obviously a huge topic, especially last March, and we'll kind of break it down in many ways. Outside of Washington, there was a lot of conversations centered around workers' compensation. We don't have to delve into detail on that here because obviously most of our ABC contractors are Washington-based contractors. We deal with L&I. If you have questions and you do out-of-state work, make sure you talk to your broker because there are some impacts on workers' compensation. But the biggest thing was, in terms of contractors, kind of a fleet perspective. And I know, Nick, Aran, and I all centered around that. So on the reductions, other than work comp, I don't know if Aran was going to speak to anything, because I think that really lays more to the audits in terms of getting your money back, and if you're not auditable, or if we
that's a great point, Stephanie. I can jump in there real quick. And one thing I'd like the ABC members to realize is don't necessarily entirely count on your audit. Now, it really depends on your carrier in regards to how much money you can possibly get back. So if you're with a Nationwide, a Liberty, a Zurich, a lot of those companies that you see on TV, they have what's known as a two-way audit. So if you beat expectations, you're going to owe a little additional premium at the end. If you're under expectations, you might get a little bit of premium back. Even with those carriers, they typically have a minimum premium. So I don't want you to rely on that entirely, and it's really important to talk to your broker, because if you do have changes to your exposures, and when I say the term exposures, when you go through that renewal process, you're giving them gross sales numbers, you're giving them sub costs. If you're a trade contractor, usually working on payroll. So it's either one of those or some type of combination of those. If your year is going to be a lot slower, it's a lot easier to make those changes, halfway through the year instead of, a month before the renewal, because at that point the carrier is thinking to themselves, well, we've insured them for this amount for 11 months. We've taken on this risk. They're not really in a position to just forgive a lot of the money owed. So really keep in mind, you don't want to rely on the audit too much. And one other point I'll make is, in regards to carriers, there's those standard markets, but there's also what's known as surplus lines. And a lot of the ABC members are with the surplus lines. there's absolutely nothing wrong with surplus lines. It's usually reserved for classes of business that might be a little more higher risk, maybe have a little bit of a claim history, but those actually usually only have a one-way audit. You might have a little bit of wiggle room, but basically at the end of the term, they're going to say, no, you owe us money, but we're not going to give you any money back. Now, that's not insurmountable, and with good communication with your broker and good communication with your carrier, you may be able to work around that. But I think the panel here would agree that early communication and not wait until the last minute, if you do need to make those adjustments, is going to be really beneficial.
So, somewhere would you say painters are in that qualification, Aran? Is that appropriate to say?
Painters are actually probably pretty good in the standard market, as long as you're not dipping your toe too much in the residential side. I know the ABC membership is mostly commercial, so we don't have to worry about that too much.
Well, I think Aran landed on a great point in terms of, again, nailing it on really having those conversations with your brokers. We have a lot of clients that are in that non-standard market, which, again, nothing wrong with it. Made it a little interesting, though, because with COVID, it's hard to get out that crystal ball and estimate what you're going to be for the next year in terms of, okay, well, we're usually 7 million, but shoot, what if we're going to be 3 million for the next year? So really having that discussion with your broker, because there's different things that we can do in terms of step rates or asking for credits on the renewal to make up for the fact that we were way under our exposures due to the COVID shutdowns, things like that. So the biggest part is just open communication with your broker and making sure that, you know, they're a construction broker, they know what they're doing, and they have those relationships with the carriers to ask for certain favors.
So at least once a month, what are you talking? 6 months, every 6 months?
Well, so I would say obviously a lot of these conversations were happening when COVID was starting last March, as well as for my companies and my clients that have renewed since then, where we're in those situations that Aran was speaking to, where we only audit up, and we know that moving forward, you can kind of set a 4 to 6 month check-in of, hey, we estimated 4 million or we estimated 10 million. Where are we at? What are we looking at? Do we need to make some adjustments, or do I need to get out ahead of things with the insurance company? And like Aran said, it's that early check-in, so it's not a week before the policy renews. Hey, Stephanie. Hey, Aran. Hey, Nick. We said 4 million. We did 20. That's not going to be a problem, is it? So it's really early communication with your broker.
Okay.
And I think with credits too, I kind of spoke to fleet a little bit. We're seeing that major question. I'm sure that Nick and Aran saw a ton. And Nick, I don't know if you want to speak to kind of what you went through with your clients in terms of when that inevitable question came up. Well, what about all my vehicles that are sitting around because we're not doing as much work?
Yeah. No, I appreciate it, Stephanie. Yeah, I mean, the overall, right, I mean, March, April, May was a really trying time for all of our clients, right? And I'm sure all the ABC members are in the same boat. And then we realized that construction was deemed essential pretty much across the country, which was super beneficial to all of our clients. And so a lot of that initial frustration and concern about return premiums and how does that work kind of went away when the whips still filled up and everyone looked pretty good for the 2020 and 2021, thankfully. So, but to your point, Stephanie, we did have a lot of clients that had equipment and really vehicles that were not being used. And so they came to us and said, why am I paying thousands of dollars to insure these vehicles that are sitting in the yard? So just more of for a future if this happens, or if you do have vehicles that aren't being used, some of the things really obviously connect with your broker to see if there is a return premium for those. Depending on if it's composite rated for your auto or it's individually rated, it depends on when you'll receive your return premium. But one of the things that we did find out is that you really do need to contact the DOT, and you need to make sure that the FMCSA, so the Federal Motor Carrier Safety Administration, has the appropriate number of autos listed for your company. So without that, we're not able to not insure your fleet if the FMCSA has those fleet autos listed. So it gets a little complicated. The regulatory bodies get involved. But if it says 3 on your sheet, we can't insure 1, right? And you can't just take it out. You can't decommission it. So again, there's a little bit of red tape there. And so you have to be a little bit proactive on that front. But once you do, obviously you want to make sure that you disconnect the battery, you keep it locked in a safe area that's either fenced in or in a garage. We have seen, unfortunately, some that were decommissioned, still insurable, thankfully, but you know they're being there's opportunities for theft, joyriding, and those things that again covered from a corporate perspective, but you're going to be paying these losses on your auto insurance for the next 5 years as the losses, reflect that. So really the risk management side was something that we really had to talk with our clients a lot. And unfortunately, some of them had some situations where they weren't as prudent on the risk management side. And again, speaking with your broker about that, if you are going to decommission and you don't want to sell them because the price isn't right or it's not the right opportunity, but making sure you keep those in a safe spot is super important.
So if you're going to take vehicles off, they have to be unregistered from FMCSA.
Correct.
And DOT, and then in a risk management side, protect them by removing the battery connection and making sure they're not movable for theft.
Correct. Yep.
Okay. Cool. Well, that really helps on that end, and hopefully we are able to save if we're not using those vehicles. And then another question that I'm wondering about is project extensions. As we maybe reduce fleet, we might have to actually extend some projects. What kind of trouble are we getting into on extending projects with COVID? Aran?
Yeah, I can jump in on this one a little bit because I've seen that pretty commonly. And most projects we have, and by we're talking about specific projects here. So maybe it's a tract development, maybe you're building one large commercial building under its own separate policy, or maybe it's a RAP policy. And by way of background, a RAP policy, a OSIP or a CSIP is another couple terms for it. That's one insurance policy that either covers the owner, the general contractor, and everybody down, or the general contractor and all the subcontractors. So these RAP policies are actually really handy. If a claim does happen, there's not a lot of finger pointing or anything like that. There's one policy in place through the statute of repose. So that RAP policy is a general liability policy, and generally speaking, the general liability policies can be extended with not a whole lot of fanfare. They're going to ask, how much time is left on the project. Sometimes they're just going to do the carrier will do just a sort of a flat fee, or they'll dig into it a little bit deeper in regards to remaining costs and everything like that. But one thing I did want to touch on is the builder's risk, because that can be a little bit more problematic when you extend projects, and it's for a couple reasons. The main one is because the longer a project goes, the more likelihood the builder's risk, which ensures the structure itself, there could be a fire, there could be vandalism, something like that. So when they look at extending builder's risk, they look at the time element, how much longer is it going to be out there, because that's more and more risk for the carrier, as well as the completed costs on the ground. When you're wrapping up a project, let's say you're building an apartment building and you're 80, 90% done, but you just need 3 or 4 more months, the carrier's thinking to themselves, well, they're going a little over, and if there's a fire now, boy, that's going to be a really big loss for us. I mean, they've already 80% of this building is done. That's going to be a really big hit on the carrier standpoint for the builder's risk. So the builders risk carriers are a little hesitant in extending those. They'll usually do it, in my experience, and I imagine Nick and Stephanie can chime in on this as well, but they'll usually do it at least once, just because, it's part of their due diligence and they want to make sure they are compensated accordingly for it. But the longer it goes, the more iffy they feel about extending these projects. So, as your broker, we can always find you a solution. You're never going to get stuck. We're going to find you a carrier. But it can be pretty expensive. So one of the rules of thumb I have with my clients in regards to extending these builder's risk projects are, if you think you're going to need 3 more months, double it. It gives you a little bit more wiggle room, and with most carriers, you're going to be able to be refunded that premium that's unused anyway. But once you start doing extension upon extension upon extension, I think that's when the builder's risk carriers get a little nervous. So that's been my experience.
Aran, I think you nailed it. I can't tell you how many times one of my owners reaches out, hey, we need an extension, whether it's on the builder's risk, whether it's on the RAP or the project-specific policy. I promise we'll be done in 2 months. And that's their perfect ideal world. And I have to tell them, okay, when you say 2 months, don't try and sell me. Does that mean 4? Because in the real world, and we are seeing projects that get delayed, you've got to be realistic, because getting that second extension, good luck. It's going to be tough.
Yeah, I would just echo the same thing. And I think COVID was a bit of an extenuating circumstance where the carriers were obviously, they knew you weren't maybe working for that 2-3 weeks. But this is more on a go forward, I would say, especially for future projects that don't have a global pandemic going on, just being a little bit more conservative on your timeline and have the Gantt chart extend a little bit just to give yourself some wiggle room so that it saves you in the end, and it saves a lot of headaches.
There are possibilities if you do have to use a second extension.
It just costs you. You just have to pay for it. So, but they could also say, no, we're done. And that's the fear that you run, that Aran and Stephanie are talking about, where they say, well, why does it keep getting delayed? What's happening? And then you open up a bit of Pandora's box of, is it they can't get the supplies? You know, the big thing we're seeing with these projects, especially in wood frame, and we'll talk maybe a little bit more about that, but the wood frame marketplace is very, very challenging right now. So the 4 years ago where the three of us could estimate that, yeah, it's a 20-cent rate and we can get it for you, no problem, those days are gone. So a lot of underwriting. You're looking more at 40, 50-cent rates on the wood frame projects. So it's literally, the cost is double. So we have clients that come to us and say, well, we did this 4 years ago and it was half price. And we just say, yes, that's correct. That's you are reading that answer correctly. So just a lot more vandalism. We're seeing a lot of arson going on with projects. So again, to Aran's point, the longer these projects are on the ground unfinished, it just provides more opportunity for arsonists to come in and burn them down or do different things. And that's what these builders risk in particular policies cover.
Especially the level.
I think with that, on the timeline, especially with the builder's risk, people try and get aggressive on their timeline to help with the premium costs up front. Right. But if you estimate 21 months for your project in downtown Seattle and it takes 24, getting those 3 months at the end of the project, just like Aran said, it's going to be much more expensive, because that is when the insurance company is going, oh my gosh, all of our risk is there. Whereas up front, they're not as worried about it because they're building it in over time. So getting 24 months up front, much less expensive than getting 21 months with a 3-month extension.
Got it. There's one more big topic that we should talk about, and that's cyber liability. We've heard about the big breaches with Target and some big banks. What are we as contractors having to worry about, Nick?
Yeah, I think we probably all have we could go on for 2 hours about this, like we've joked about before. But in reality, cyber liability used to be a big topic for all of our retail hospitality clients, right? I mean, that was for the genesis of it. You mentioned it, Josh, in terms of the Targets, the TJ Maxx's, but even a TJ Maxx, right, was an HVAC contractor that was deemed that the cyber attack was able to be attacked through the HVAC contractor to get into their point of sale systems and cause a ripple effect of PCI, which is the personal credit card information, and PII, which is the identifiable information for individuals that's within credit cards. So it creates this whole ripple effect, unfortunately. And so what we're really seeing with a lot of our contractors, at least on my end, is the ransomware attacks. And from the ransomware attacks, that's where you show up and your IT comes in on a Saturday and opens it up, and it's the blue screen that says, if you don't pay us $100,000, we're going to wipe your entire system. We're seeing a lot of those coming through now, and they get in various ways through phishing attacks of your employees when they click on something they shouldn't click on, and then they get access and they watch you. Password attacks. The other big one that we're seeing a lot of is social engineering and deception fraud. So that's where you get the email impersonating an executive. So the owner, all of you that are watching, right, the ABC contractors, you're ready to hop on a plane when the world opens back up, and your controller gets an email supposedly from you that says, hey, go buy 30 Amazon gift cards, scratch it off, and send it to our number one customer because we really need to take care of them. And they're super frustrated with us. And unfortunately, people don't pick up the phone and call the actual owner to say, this is crazy, you're not that generous normally, what are you doing? Or they say, yeah, he is super generous or she's super generous. And we see them do this all the time, and it's not a big deal. So we're just seeing a lot of those deception fraud and impersonating the owner. And so having, talking to your bank about what they're doing on that front, but also talking internally, especially with your finance team, that, hey, if you get an email that asks us to do anything with gift cards, credit cards, changing of pay-to codes, you got to pick up the phone and you have to call the customer, you got to call the owner or call whoever that sent the email And again, don't use the signature that's on the bottom of the email that just came in requesting it, because they change all that information as well. You got to go to a previous one or wherever your main contact list is and call the person and verify. And yes, it takes 5 more minutes, maybe a 10-minute conversation to catch up. It's good to catch up with your customers and touch base with them anyway, but it really can save you a lot of headaches, a lot of cost. And it just, at the end of the day, is something we're seeing with all of our clients. And if you don't believe us, you can talk to your banker, because they're dealing with it a lot. So the funny part with all this is cyber liability policies are not that expensive. They're starting to go up because we are seeing more claims come in. But we're really, for a lot of our, especially our smaller contractors, we're seeing policies in the $3,000, $5,000, $10,000 range with fairly low deductibles. And we're seeing payouts in the $60,000, $70,000, $80,000, $100,000 when you have to recreate all your servers and your databases. So it's really a worthwhile coverage. It's free for your broker to give you a quote. We highly recommend it for all of our clients. And then kind of really the last thing I'll say is that a lot of companies are moving to the cloud. We were talking to Josh about this. If you look at your contract with Amazon Web Services or Red Hat or IBM or whomever it is, the limitation of liability in that contract will say, we'll pay you $100 per $1 trillion of documents that we lose, right? So the cloud servers are really not protecting you as an organization if you move that way. So we really recommend in that case, especially if you're using the cloud, that you buy your own cyber liability policy that can protect both third party, so the cloud that you send it to, but also your first party information.
Oh, wow. So the server, whoever we buy from, will not protect us. What happens if we are in that situation and we get the blue screen? Then what do we do? And we do have this policy. Yep.
So the beauty of a cyber liability policy, and that's a great segue, Josh, is that it really does provide a roadmap for in the event of a claim. It sets up your forensic accountant that can be used. It sets up the IT company that can be used. And these carriers like a Beasley or a Hiscox, they have all this staff and all of these point of contacts for your crisis management plan already set up. So it's a beautiful thing that $3,000, $5,000, $10,000 premium also provides the roadmap in case something happens. And again, if the Pentagon can get hacked, I mean, there's no way that Propel, Parker Smith and Feek, Hub, Washington Commercial Painters, we're all susceptible as well, right? And so for these fairly inexpensive premiums, it does provide that roadmap, which is super helpful and worthwhile. So accessing it through your broker, but then the carrier really has great tools at their disposal. So it is important that you go with a reputable carrier. I would highly recommend that as well when you're going through it, and one that your broker recommends is. But again, the large brokers like a Beasley and a Hiscox are kind of the best of breed, and those really are the ones that are providing great terms as well.
Well, and Nick covered cyber so well, and I mean really hit on all the topics. And think about it, with COVID, right? We're talking about how COVID's impacting our extensions or our prices, things like that. It's also vastly impacting our workplaces, right? We do have people working remotely, or people starting to try and use remote desktop protocols for the first time. You've got home networks that are much less secure, or less secure hardware in general. And I think we've found too, especially as contractors started to work from home or their office staff started to work from home, you're a little bit more relaxed at home. And so some of what we saw was relaxed privacy policies, even though at home you should probably be less relaxed in terms of from that vantage point. So we saw a sharp increase in the cyber claims since COVID has started. When it first hit, there was a lot of click on the CDC link for information on COVID. It was not a CDC link. You have just let them into your network. We saw a ton of that. And with Nick, how he mentioned a lot of ransomware, he nailed it in terms of those social engineering fraud claims. But what I saw a ton of is a different type of fraudulent transfer scheme in terms of just dummy invoices. Whether they get in, they see a chain where they know you're expecting an invoice, so they send you an invoice that looks like it came from your client or whatnot. You were expecting it the whole time. You pay it. It didn't go there, and then a month later you get a follow-up on, hey, why didn't you pay this invoice? And you're sitting there going, we did. And or vice versa. I've had clients on both ends of it, right, where we paid the dummy invoice, and I've had clients where our network was breached. They reached into one of our email chains and changed the invoice and followed up, and now invoices that we have sent out have been paid. They haven't been paid, and that's a cyber loss as well.
Yeah, probably not a lot of our contractors do this, but especially our clients that use wires, that is the most susceptible to cyber attacks for sure. And it's wiring it to, it's almost like doing a Western Union where once you wire it, the money's gone. So if you are doing wires for whatever reason, those are something to be super cautious about. And Stephanie hit on the head. I mean, in the world of Internet of Things and all of our technologies talking together and equipment that goes back to a central repository control room, we had a client that had their entire U.S. and Canada operation shut down completely. Their mills, so not a contractor but a manufacturer, completely shut down. They had to change all their email addresses from the companyname.com to the companyname.org. It was a 3-month shutdown. It was a disaster, right? And so cyber liability covers those type of situations, thankfully, where a hacker gets in and exactly like Stephanie said, they don't just get in, do their damage and leave. They get in and they hide and they just watch and they see how you send emails and you say, hey, Aran, or you say, hello, Stephanie, and they customize it exactly to how the owners speak to all of their staff. Sincerely, Ted. Sincerely, Josh, right? Cheers, right? I mean, they watch and they try and make it as lifelike possible as well. And so I guess another tip is when you receive those emails and if somebody thinks that they're a little fishy, no pun intended or pun intended, when you click on it, you just want to make sure that it's actually from that source and it's not one of those gobbledygook long email addresses that come through. So that's another way to verify and check.
I've heard maybe hovering your mouse over the link and it'll show what the link actually goes to is a good way. But man, it seems like it's almost like gonna happen. It's so common. So having this insurance.
I think one of the myths too is, they're not going to go after me. I'm a, $5 million a year subcontractor. These guys are like door-to-door salesmen. Okay, they're going to knock on every door, and if you open the door, they're coming in. It's not that they've specifically Googled you, they're looking for you, they're coming after you, they're hitting everyone. And some of these guys are good.
That's scary. Wow, well, lots to think about. We've got covered a lot of information, hopefully in a short period of time. And I want to thank all of you for sharing your wealth of information. And Stephanie Carlin with Propel Insurance, Aran Buchan with Hub Northwest.
That's right.
And Nick Warren with Parker Smith and Feek. To our audience, thanks for tuning in, and I really appreciate your time.
Thanks, Josh.
Thanks, Josh.
Thank you.